From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmons, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines, here's your host, Neil Timmons.
I got Steve Bruere here on the show. Steve, welcome.
Thanks for having me.
I'm excited you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Yeah, I'm a farm kid from Iowa. So my family farms south of Des Moines. My dad and brother still farm together today. And I got in the real estate business right out of college back in 2003 and had an opportunity to get involved with People's Company. And, to jump around a little bit on that, People's Company actually started out back in the 1960s as a farm management department for a bank, People's Bank in Indianola. And there was a bank merger in the 70s, and we were spun out of the bank in 1972. And so a lot of people think I started People's Company.
Well, I was in that camp, yeah.
There you go. So when I came on board in 2003, the company had just gone through an ownership transition and it sold the year prior to that. And the gentlemen that bought it were running it when they hired me, but they quickly turned the keys over to me. So I kind of inherited the job of running People's Company going back to 2003. And so for the last 21 years now, I've been running things. And really that's been when the growth outside Iowa really started. And so today we work in about 30 states around the country, and anything related to farmland transactions, that's what we work on.
What got you, well, obviously you grew up in that business. What kept you in the farm related business?
Yeah, I've just always had a passion for farmland and real estate and People's Company. We do a lot of different things. So we have a pretty significant brokerage and auction business that we facilitate transactions all over the country. And, you get involved with all sorts of stuff, vineyards and our office is down in the Mississippi Delta, rice and cotton, and up in the Pacific Northwest, apples. And I fall in love with every area that I go to. And so I love agriculture. I love real estate, love farmland. And so this is just a perfect career for me. And so get to do what a lot of people would love to do for fun every day, get out and look at farmland.
How did you stumble into the role with people?
Yeah, so my parents, as I'd mentioned, they farm, and then they had the Pioneer seed corn distributorship growing up. And then my grandpa ran the Ford New Holland dealership in Indianola, and so I grew up in the middle of agriculture, and I always wanted my parents to buy more farmland growing up, and then like a lot of farmers, they like buying farm machinery and that sort of thing, and so I was always taking the sale bills and dad saying, hey, we should buy this farm and that sort of thing. And so I got my real estate license while I was in college. And when I graduated in May of 2003, the very next day I was out peddling real estate and trying to put deals together. And like I said, when I started, it had just gone through a transition. The guys that hired me, you could tell it was more of a passive investment. And so they, about 6 months in, they said, hey, this, you seem to be passionate about this. And they turned the keys over to me. And so I kind of inherited that job and really started ramrodding things around at a young age. And I always joke around, I was too dumb to know better on a lot of things. And you look back after 20 years of this, and I don't know if I knew then what I know now, if you'd still play it the same way, but you get so deep into it that you got to see it through. So,
all right. So for the city folks, it's just ground. You just go out there and put some seed in it. It just grows, and then you harvest it. It's way more nuanced than that. This is a real business. Big farming is real business. There's a lot of things, a lot of planning, a lot of activities that go into this. The management of the farms is a very significant activity, and it's something you guys participate in a large way.
It really is. And yeah, a lot of people think you just own farmland and you rent it to the farmer and collect your rent check and that's it. But there's so much today that impact farmland, and you see a lot of things around carbon, wind, solar, community solar, battery storage, and that all involves farmland. You hear a lot about like the carbon pipelines going through Iowa. And so if you're an absentee landowner and you're sitting there, getting letters on your farmland about a wind project or a solar project, who do you go to? And so we get involved in all sorts of different projects. And then there's a lot of things around crop insurance now. 93% of the acres in the U.S. have crop insurance policy associated with them. And it's you can insure your revenue on each acre of farmland. And so optimizing your crop insurance strategy around protecting, creating upside for the farm, but then protecting downside. So we manage farms where we're marketing the grain and controlling, what crops get planted and that sort of thing. So there is a lot of nuance to it, and there's a lot more to it than just collecting the rent check.
Historically, farmland has been an area, an asset class in which one puts their money to preserve their capital. And so I know of a number of people who sell very large companies, and it's time to deploy capital. They've got to preserve it. It seems like that has been a safe haven, especially in time periods where inflation has been high. And of course, we lived that for the last handful of years where it's very prevalent.
Yeah, no, we work with a lot of families. I always say that once you've achieved all else in life, you see a lot of these really wealthy families put their money into farmland. It's positively correlated with inflation. So if you look at a chart of inflation, you look at farmland, completely positively correlated. And it's also non-correlated with public equities. So for people that want to have a diversification, it's a perfect asset for that. And so, and then you've got all the, population growth and the demand for food, fuel, and fiber. And so a lot of people have developed investment theses around farmland being a part of that. And then you got the whole regenerative side of things. And so there's a lot of reasons why people want it. But if you look at Iowa, the last 20 years, appreciation's averaged about 7% for farmland in Iowa. And so it's a great asset.
Makes me think, as you said, I love the way you stated it, for all those who have achieved everything else in life. It's not as easy as going to, your financial advisor, stockbroker, or whatever, however you want to classify or call them. They don't sell farmland in the stock market, right? It's a tangible asset, and you've got to transact in a very different fashion.
Yeah, so there are two publicly traded REITs that you can go buy their stock, Farmland Partners and Gladstone. Yep. And I've joked around and said that, the publicly traded REITs have done, they've taken a non-correlated asset, meaning it's not correlated with public equities, and they've made it correlated.
I knew where you were going with it.
Yeah,
right.
Yeah. And so I don't think the public markets are a very efficient place for people to own farmland. And then you'll see a lot of funds out there, and it's really hard to take, your cap rates on Iowa farmland are probably close to 2.5 right now. And so it's hard to take a asset manager and put their fees on top of that skinny return. And so when you look at that return profile that I talked about, 7% appreciation, 2.5% cash yield, you've got a 9.5% total return that you're working with. But you need to get into it, not chasing cash yield, but chasing how that asset's going to perform over time and build that generational wealth and that sort of thing. And so, folks that decide, hey, I want to buy farmland, 160 acres in Iowa might cost $2.5–3 million, right? And so you can't just go dabble. Like, you've got to jump in, and then that's where you really need somebody who's in the business that can help you identify, are there drainage issues, and there's various tax implications. And so that's what we do. We've got a capital markets group where we work with folks that come to us and say, hey, we want to build a farmland portfolio. We want geographic diversity. We want, maybe some regenerative, and we want some permanent crops, and we want row crops. And we'll help them build their farmland portfolios out.
Hi, it's Ava Baukamp, the Investment Relations Manager for Neil's firm, Legacy Impact Investors. I'm inviting you to join us for our next investor workshop, our monthly Legacy briefings. In these tactical Zoom calls, we cover topics and case studies for subjects such as taxes and depreciation, navigating macroeconomic shifts, and evaluating deals as a passive investor. At each virtual workshop, we are joined by an industry guest who covers their topic in 45 minutes or less. No fluff, no pitches, just education and conversation with an expert each month. Every workshop ends with live Q&A from Neil and our guest. All briefings happen on the last Tuesday of the month at 3 p.m. Central. If you can't make it live, recordings are sent out exclusively to those who've registered in advance. To join us on the last Tuesday of this month, visit legacybriefing.com. Go to legacybriefing.com to register. If you're a first-time registrant, I'll send you a free resource at sign up. Head to legacybriefing.com and I'll see you soon.
Yeah. On your broker side too, I mean, it seems like the Des Moines in the greater Des Moines area continues to expand and expand. And at some point, certainly through some of the major counties that are right here, right? Polk and Dallas, Warren comes to mind, of course, that your farmland has now become development ground.
Yeah, we do a lot of work. It's specifically in this market, what we call transitional development ground. So it's farm ground that's in the path of development. And you look at the Des Moines Metro, as it's growing, there's about 3,000 building permits that get pulled every year in Des Moines on like single family. Well, if you figure you need 3 lots per acre, then you need about 1,000 acres of land every year to keep up with the pace of development around Des Moines. That's just residential. And then you've got all the industrial and commercial uses as well. But you've got 27 million crop acres in Iowa. So there's a little bit of this, we're losing all of our farmland to development. And while that's somewhat true, the scale by which people think about it, it's not maybe as bad as it sounds. But yeah, we do a lot of work helping people think through when's the time to sell that future development ground. And then we have a lot of people that like to invest in that type of ground as well.
You've been involved in tons of transactions, seems lots of investors with different investment theses. Those over the course of the last 20 years in your career, the people who got it really, really right and the people who missed the mark, let's say, what are the differences? What do those look like?
Yeah, I was with a family this week out in Oregon, Washington, Idaho, and I shouldn't say the name, but a very, very, very successful farmland investor. And they honed in on they only buy quality. And we see people chase return, and usually chasing return, you're doing that at the detriment to the quality of asset that you're buying. And so going back to cash yield and appreciation, we've got some assets that we manage in like Baca County, Colorado, for instance. That was the center of the Dust Bowl. Well, you look at your appreciation rate in Baca County, Colorado versus your appreciation rate in, say, Champaign County, Illinois. Investing where you've got high quality land with high quality operators, you're going to outperform those low quality areas. And so I think the people that understand that, yeah, you're going to give up some return to buy in those higher quality areas, but over time, your appreciation of that asset is going to do so much better than if you chase the return. And so I see people screw that up all the time.
To liken that to the we'll call it the real estate side, let's say apartments. Yeah, I'm thinking C class comes to mind, or D class, some of the war zones that exist out there where it looks like a tremendous yield on paper, but it is a solidly poor area, poor as in poor performing area as it relates to appreciation.
Yep.
It gets beat up over a period of time versus buying newer, high quality, buying Maine and Maine, if you will, from a location standpoint, where you're going to bank on appreciation.
Different assets, same thing though. Yep, 100%.
Yeah, makes total sense. What are you most excited about this year?
This is a tough year because nobody really knows which way the wind's blowing, right? And so the changing cost of capital is really having an impact on transactions, because you look at farmland at a 2.5% cash yield, and we're having people say, well, why would I buy farmland when I could go get a T-bill for 5? And it's a hard thing to debate. But if you go back to what I was talking about, 2.5% cash yield, 7% appreciation, not correlated with public equities, positively correlated with inflation, that T-bill at 5 versus farmland total return at 9, I know which one I would rather have. And so, and then you got this renewable renaissance that's happening. So we're negotiating a lot of battery storage deals and community solar deals. And with artificial intelligence, there's a big land grab now for a lot of these data centers that are coming in and needing to access next to substations and 345 kV lines. So the farmland narrative, there's never been a better time to jump into farmland if you believe that we're going to have inflation, right? And yet a lot of folks are saying, well, I'll do the T-bill. And so you asked what I'm excited about. I think this is that transition year where everybody's getting acclimated with the new cost of capital and maybe accepting that we're going to have a little more inflation for longer than maybe they thought. And interest rates might be a little higher for longer than what we thought. And but that's going to create a lot of opportunity for people that want to jump into the asset right now and know that long term it's going to perform very well.
What roughly, any idea, what percentage of the total farmland transaction, call it 100%, what percentage of that typically is utilized with?
Yeah, so nationwide, there's $4 trillion worth of farmland, and it's got about 13% leverage against it.
So the conversation relative to interest rates is largely, where do I deploy capital? It's not, can I make a deal work as if it's some sort of development project or a building project, which, is probably more like 50 to 60% leveraged. So you got to pay that back. It sounds like it's mainly, I have other options with my money as it relates to yield, and farm is just one of them.
That's exactly.
That's what you're continuing.
Yeah,
right here.
Yeah, 100%.
Yeah, that becomes an interesting conversation. We look back to the 80s, and you look on traditional, I don't know why I keep calling yours non-traditional, but with the structure on it, cap rates may have hit somewhere in the 10 range in 84, 85, 86, in which your long-term debt was costing you 12 to 17%. It never rose much greater than that.
Yeah,
because there was so much inflation taking place.
Yeah, the interest rate and the inflation thing, they kind of are offsetting each other a little bit. And so, like, I was looking at this the other day. If you go back to 1973, the average acre of farmland in Iowa in 1973 is around $675 an acre, give or take. The inflation really set in the 70s, and by 1981, your average acre of farmland in Iowa was $2,100 per acre. So people that jumped in that positive correlation with inflation, they benefited with that from 73 to 81.
Sure.
Paul Volcker comes along, 1981, jacks the Fed fund rate up to about 200 basis points above where inflation was at. And by 1987, farmland values were down to like $875 an acre. And so you had that ride up, and then you had that ride down. And I think what's happening now is the Federal Reserve raised rates quickly, and so they doubled. And so I think you have a little bit of that already priced into the market. We're not going to get that ride up that you got from 73 to 81, but I don't think it's going to fall as hard because you've got such little leverage against it. And when you look at farmland, about 1% to 2% of it turns over on an annual basis. So very little debt, no distress, and very little inventory, and there's a lot of people who want to own it. And so even though the economics kind of suggest that maybe farmland values should soften, I don't think they're going to soften to the degree that maybe a lot of people think that they will. But time will tell.
Time will tell. Well, if history tells us that, the Fed came out December 13th of 23, indicated that they thought we'd have some from 4 and 7 cuts in 24. 5-year Treasury fell about 30 basis points overnight, and we're sitting here almost June 1st as we record this of 24, and they haven't made any adjustments, and they may not make any adjustments this year. They've kind of backpedaled on what seemed to be pretty aggressive as it relates to rate cuts coming in 24.
Yeah, no, I'm not expecting or counting on any rate cuts at all, to be honest with you. And that's where this thing is going to get interesting because if the two factors, I think inflation's positive for farmland to a point. And what I was explaining in that 73 to 81, inflation was good until Paul Volcker came in and said, we're going to completely stomp out inflation. And that's where your interest rates got above the cost of inflation. And then that's what killed the farmland market. So I think that's what I'm watching. A little inflation is probably going to be good for farmland. But once they decide that they're going to permanently stomp out inflation, then it becomes a bad thing. So
it's the 80s be challenging for anybody,
100%,
or in any business.
Yeah, but this is a different world. Like I said, in the 80s, you didn't have the crop insurance system that we have today, and there's not as much leverage against farmland as there was in the 80s. And so I don't think we're anywhere remotely close to that time. Yeah.
Talk to me about agrihood. I just read a piece in the Business Record about agrihood, and I, of course, have talked about it over a period of time. Give us an update on where things are at right now and what what's taking place?
Yeah, that's a fun project. So, coming Iowa, Warren County, where I grew up, and we started assembling land there, I don't know, 5 or 6 years ago. And what originally started out as just, wanted to own land in that coming area. We hired a master planner out of Aspen to develop a master plan around this whole agrihood concept. And then as we got into it, the old joke in farmland is I don't need to own any more, just the piece that borders me. Well, and then every piece you buy, you border another piece. And so that project ballooned into about 900 acres. And it's largely coming together as we drew it up about 5 or 6 years ago. And so we just announced a townhome project that we're doing in Iowa's first kind of major geothermal community. And Wilson's Orchard opened up this spring with their 60-acre orchard and event venue and food to fork restaurant. And then we broke ground here a couple weeks ago on what will be the extension of Main Street and Cumming. We've got a workforce housing tax credit for one set of buildings that will have retail on the ground level and then apartments on the upper level. And then we're building our office building across the street from that for People's Company. And it's designed as a town square kind of Main Street vibe. And that's our roots, right? That's where we came from. And so I'm excited about that project, and it'll be fun to kind of take that modern feel, but bring back a little that old town square vibe and bring it together.
It's an exciting project. Can't wait to see it continue to come together and come out of the ground.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmons, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Yeah, it's going to be a long grind. Fully developed, I think that'll be, somewhere around 1,500 to 2,000 housing units. And so when you think about Cumming, Iowa, it sits in between Norwalk and West Des Moines, where you have about 300 building permits happening on both sides of you. So, how quick that'll develop, we're trying to do it right. We have a town architect, we have design standards, and so the homes have unique character. We have street trees. So everything's that slows down velocity, right? Like when you're trying to really protect the integrity of what you're developing, it makes it harder for people to meet the standards, and that slows down your velocity. But we're starting to really see the community as it comes out of the ground. It just has a certain feel that people want, that small town charm and character that a lot of us grew up with, and so it's something we're really proud of.
Yeah, no, that's terrific. It's going to be fun to see how everything comes together here. Steve, ready for this? Let's do the final 3 questions.
Let's go.
If you had one piece of advice to your 20-year-old self, what would it be?
That is a good one. I think just do what you love, right? And we talked about that a little bit at the beginning, but I wake up every day and I love farmland, and it's not work, and so I think the one thing I would say, I tell some of the people in our office from time to time, is being successful was actually easier than I anticipated it to be. Meaning there's so many people in this world that don't call people back, that don't do what they say that they're going to do. They're not honest or whatever. And if you just do what you love and you call people back and you're fair and honest with people, you're going to be successful. So that's probably the best piece of advice I could offer.
Showing up, you're halfway there.
That's right.
2 books that changed your life.
I love to read, and this whole interest rate conversation, like I'm enamored with that, the cost of capital and history. There's a book that I read. It was written in 1974 during the REIT crisis, and it was called Lords of the Land. And it goes back to the beginning of the United States when there was speculation around where the capital is going to be built, of course, Washington, D.C., and it goes through all the boom and bust cycles going back to the founding of Washington, D.C., through 1974. And it's just a fascinating read, because what you really start to understand is there's a saying, there's no new people or no new lessons, just new people learning them. And when you look at these boom and bust cycles, greed and fear are pretty predictable. And so you don't really know what, if it's COVID or, a 1980s farm crisis or a war or whatever it is, but the human's reaction to those events is pretty predictable. I didn't give you 2 books, but that
one exceptional one will do.
Yeah.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know to know how your business is running?
Yeah, we've spent a lot of time. We follow the EOS system, and so we get KPI reports, and so I get a report every week with some of those data elements, and it's pretty. It's each division's different, but I think you want to know what your revenue is and what your net income is and what your cash position is. And there's a lot more than that, but those would be probably the 3 drivers.
Steve, I asked you lots of questions. We could talk all day, I'm certain, but what's one question I did not ask that I should have asked?
Gosh, I think you're pretty thorough. You're pretty thorough, but a lot of people, oftentimes want to know where you're headed, with the business and whatnot. And, as we built this out, it's been a long grind, 20 years running hard and whatnot. And we've really kind of got the business to where, we're pretty proud of it at this point. And, as I've worked through this, I've got 4 kids, 9, 11, 13, and 15, and you get running pretty hard. And people want to know how ambitious you are, and whatnot. And a lot of people don't believe me when I say this, but I think, we're going to keep pushing hard for another, 10 years or so and see where this thing goes. But it's a great business that I love, and I'm proud of it. And I don't know where I'm going with that. You might have to edit that out. Yeah, the future. I'm excited about the future, I guess, is what you'd say. Yeah. So
we'll clean it up.
Yeah.
Steve, for people, they want to find you, they want to follow you, they want to connect with you, where can they go? What should they do?
Our website's a great resource. So peoplescompany.com. There's a lot of videos on there about the different services that we offer, and some great data resources too. We talked about some of the Farmland Insights and whatnot. And there's a Farmland Insights part of our website where you can go learn about how farmlands perform financially. One thing you didn't hit on was the Land Expo.
Yes, I was just going to go there. So you beat me to the punch. Yes, the Land Expo, which is fantastic. I attended here this just in the last handful of months. You guys did a great job at that. But for the audience's sake, tell us a little more about what that expo is.
Yeah, we started hosting that event in 2008. So I was about 5 years into my real estate career and wanted to put on an event for farmland owners. There wasn't anything out there. And so we hosted our first event called the Iowa Land Investment Expo, and had about 300 people show up that first year, and the media covered it. I'm like, gosh, I might be onto something here. And so every year we've continued to grow that event, make it a little better. And we've had some really awesome keynote speakers through the years. Boone Pickens and Donald Trump before he ran for president, and Martha Stewart and Kevin O'Leary, Mr. Wonderful, Drew Bledsoe, Anthony Scaramucci. So it's been a really awesome event to put on, and now we get about 1,400 people that participate in that on an annual basis, and have met some really awesome entrepreneurs and whatnot. And so 18 years now. This will be our 18th year coming up. So
yeah, incredible. I assume they can find more information at.
That's right. Yeah, you can go to landinvestmentexpo.com or go to People's Company, and I'll link up to it as well.
Links are below in the show notes for everybody. Steve, appreciate your time.
Thanks for including me.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. landinvestmentsexpo.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.